The RBI's decision to release CAD data a day earlier to prop up the rupee does the trick. The Indian currency got a breather and came off record lows to end the day at 60.19. Still above the psychological 60 to a dollar mark, but the weak US dollar and strong performance by equity markets helped the rupee stabilize. Even as the rupee recovers some losses on the back of positive current account deficit data, Ashok Gautam of Axis Bank believes that the currency will remain under pressure unless efforts are made to initiate structural reforms that will bring in dollar inflows.
We'll have to have some kind of structural things kicking in so that we see dollar supply in the market. Because if dollar supply is not there and the kind of outflow which we are seeing in the bond market as well as in the equity market, I have some numbers. In the month of June, we have already seen 6.6 billion outflow, both bond and equity. And if we only take the bond from 22nd May onwards, it is already 6.5 billion outflow. So these are large numbers, and we'll have to at some point of time see, how do we attract foreign capital which stays in the country in the form of direct investment. What I believe that the country at this point of time needs to bring their interest rates down, because ultimately it has to be India growth story, which will see rupee actually gaining strength.
Also, let's get in there. Vijay Bambani, who's author and CEO BSPL India, and joining us also is Samiran Chakrabarti, who's Regional Head Research India, Standard Chartered Bank. Samiran, hi, let's start with you first. And today has been a slightly better day after that, many sessions of decline coming in. Is it because of CAD? Is it because of the international markets? How are you reading the cues?
Well, I would say that two things. One, international markets were relatively favorable, and second is that yesterday's move was probably too excessive for a particular day, so that had to correct itself. So because of both these reasons, the currency probably took a breather. I don't think CAD had a very meaningful impact because this number is, in a sense, was known to the markets. There was not too much of a surprise there. Having said that, a drop from 6.7% of GDP in December quarter to 3.6% of GDP in the March quarter is a substantial drop.
Samir, what's your sense now going forward? Do you think 60 is the new 58 perhaps?
Well, it's quite possible that we will have some kind of stabilization around that level. 60 could become the pivot level around which the market gravitates. But a lot will also depend on even near term next week how the US data, ISM, NFP, etc. come out to be. If this fear of QE tapering really becomes very large and we start seeing equity outflows as well, then there could be some more depreciation pressure left in the system. But if the signals from Fed are more dovish, if the China data does not disappoint us, then probably 60 is something where we should be stabilizing.
Sure. Samiran, when we get the next CAD data into the markets, we would also be looking at higher gold imports. The crude prices refuse to die below. And you also, of course, have seen the inflation concerns, if not just without the rupee depreciating as well. How would you read into all of that into the next quarter? And what's your own sense in the next quarter for the rupee range?
Well, the good news is that the trade deficit numbers are going to look much better next quarter compared to the quarter that we are currently in. Because gold imports have been primarily preponed in the first 2 months, April and May. So rest of the year, gold imports might look much more reasonable. We already have seen that the non-oil, non-gold import part has been coming down. And if on top of it, if we see some buoyancy in exports, then we are hopeful that the trade data will look much better. So the big question really is that whether this capital outflow that we have seen in the last month or so, about $8 billion of cap outflows from the FII side, whether this will still remain or the pace will come down or we will actually see inflows or not. If trade deficit comes down, then even if we get about $2.5–3 billion of inflows, that should be good enough to stabilize the currency markets. But if we continue to see outflows, then possibly we could see further depreciation as well. So what we have put out as a view is that we could see the 60 acting as kind of a floor, and on the top of the channel you have about 63, which is a technical level which could happen if equity outflows start.
Samiran, so what's the level that you're working with? Because all the people who've been talking to us for the last couple of sessions since the rupees breached 60 as well have been giving a range between 58 to perhaps 64 as well on the higher side. How would you range the rupee for the coming quarter now?
They say that 63 on the upper end of the channel and about 659.5, 60 on the lower end of the channel. I think that's the broad range that we are possibly looking at right now, but contingent on this one thing, which is equity outflows, whether it happens or not on the fear of QE tapering. If that does not happen, then probably the move till 63 will be difficult to sustain.
Sure. Samiran, going forward, what is that one thing that you would want to keep an eye on? Is it going to be the Fed, ECB, the Indian domestic equity markets, FII inflows, election perhaps, inflation? How would you want to read it all?
Well, I would say that election is still some way off, and probably the market is not too much concerned about the election outcome at this moment. The primary concern of the market is QE tapering and to what extent there will be outflows from emerging markets on the back of that. We've already seen that the bond markets have got impacted. We are now waiting to see whether equity markets get impacted or not. And as we know that rupee is primarily an equity currency, not a bond currency. So if equity markets start getting impacted, then the effect will be much stronger on INR. But I would also like to see that what kind of slightly medium to long-term measures the government initiates on the back of rupee at 60, whether they improve the competitiveness of our exports or not, because that's the only long-term solution to current account deficit. Pricing through exchange rate depreciation is probably not going to help us too much on that respect.
Fair point, Samiran. Vijay, let's get you in the conversation as then, and on that note, on the charts with the kind of appreciation that we have seen today, how is it looking for the very near term, and how would you want to range the rupee now for the next quarter?
Manisha, day before yesterday, I called for a short on the USD INR at 61 levels, and I talked about a shorting opportunity between 61 and 61.5. And today's rally in the rupee is not really surprising, because the upthrust which you saw on the technical charts was basically a kind of a blow-off on the upside. And a cool-off today to the 60.25 levels in the cash and 60.59 odd levels in the future is indicating that the post-expiry cool-off is likely to sustain at least for the next one or two sessions. I'm not saying that the USD will not rally from here. As a matter of fact, it might just make an attempt once more to surpass Mount 61 levels. But in my opinion, it would again be a short selling opportunity, because the upsides are likely to meet with a stiff resistance at 63 levels, give or take 25 paise here and there. And the downside in the coming month or two is open as far wide as 58 in the currency futures segment. In the cash segment, it might just be 25 to 30 paise lower. So that's the kind of volatility I'm mapping out for the rupee for the next 2 months. And the intraday ranges, which is approximately 40 to 45, 50 paise, is likely to cross over to 60 paise per day.